Tell you when we're live. Welcome everyone at YouTube to the Bank Breezy Business Funding Training today, November 8th, with Mr. Wade Cordell. Wade, take it away, buddy.
Fantastic. Guys, today David and I will kind of tag team, but I'm going to kind of set the stage of what we're going to talk about here with a few slides, and then we're going to go ahead and jump right into this now. Pretty much every week I try to start out all of my training with all the benefits that you have with David Allen Capital by having a marketing partnership with Bank Breezy. Number one is the platform itself is 100% application process. There's no hassles. We made it more robust over the last month, and it's just going to get better and better and better with lots and lots of different opportunities for you. We provide the number one needed success tool to all your clients, and that's working capital. You get a commission, guys, you get it every day, except unless you're getting the giggle, of course. But all the other big breezy fundings, we pay on a daily basis. Your job, of course, is just get the word out to all your warm contacts. And what you're going to find if you're new here is that most of your clients are going to come back 4 to 6 times for additional funding. Small business entrepreneurs continually grapple with the need for working capital. And in a survey conducted among business owners whose ventures encountered failure, a striking revolution kind of emerged to everyone. An overwhelming majority pointing to the lack of working capital as a primary cause for their business demise. And in this presentation, we're going to delve into the critical dynamics between cost of capital and the effective use of capital by understanding and kind of optimizing this equilibrium. Small business entrepreneurs can stir their ventures towards sustainable success. But first, you got to understand the working capital cost. I mean, as we said, it's the lifeblood of small businesses. Small businesses rely on working capital to thrive and grow. However, obtaining working capital can be a kind of a complex challenge for them. So let's kind of explore the reason why. You need to understand so that I don't continually get phone calls where, why do you mean they're turned down? Or what do you mean they didn't get this offer? Understand that our lender partners, they're very eager to help your clients. As a matter of fact, they don't make money unless they can put money on the streets. And the Bank Breezy lender partners are dedicated to supporting small businesses with working capital. The mission is to assist all applicants, but challenges arise, and here are some of them. Some of the high-risk profiles that we're getting are like the ones with past defaults. They're being over-leveraged financially. We just don't want to put them in a worse place than they were when we met them. Suboptimal credit scores, I mean, below 500, and even in the 500s was a whole other litany of factors that would cause them not to want to put the money on the street because it wouldn't be good for the client to accept that money. And then, of course, their revenues being below what their minimum requirements are. These are some of the high risk profiles we have. But as we stated earlier, working capital is the lifeblood of the businesses, serving a versatile resource to address various needs. So I want to explore some of the common scenarios where working capital proved indispensable. We've got to meet the needs of the small business person. And here are some of the needs that they have told us they have, and we've seen throughout time. Fueling innovation. Entrepreneurs often require funding to bring their innovative concepts to life, and these investments can lead to increased revenue and business growth. So they have this incredibly great idea, but the big bank's not going to help them. We will be able to help them do this. Enhancing operations. There's a lot of upgrading of equipment and other things that like technology that can help them stay competitive or maybe streamline their operations and improve productivity. They might just need to meet payroll. Ensuring that their employees are paid on time, quite frankly, is a fundamental responsibility. Working capital can bridge any shortfalls, keeping the team motivated and productive. Business renovations. Businesses need to adapt to changing markets and consumer preferences. Renovating the business location can revitalize some of the customer engagement and revenue streams that they have. You see a pattern here. It's all about increasing productivity and revenue for the company. partnership buyouts. You're going to have a lot of cases where the partner exit is necessary. So working capital can help facilitate a smooth transition by buying out their shares. So it's a dynamic resource that empowers small businesses to kind of seize opportunities. And these are some of the opportunities and needs that we're going to be talking about when David gets on with me in a couple minutes. But there are risks, and I want to give you kind of an insightful perspective on lender risk. The Bank Breezy lender partners employ advanced algorithms to assess the risk associated with each funding application. These calculations result in factor rates that reflect the specific risk profile of each applicant. So everything's an individualized risk assessment, folks. There's not a cookie cutter for anybody. It's not everybody in this category is going to get this. They're looking at all the algorithms associated with that business. It's important to note that each application is evaluated on its own merits, taking into account various factors that contribute to an overall risk factor. The two main things is fairness, ensuring that the applicant that is deserving because of their unique situations, this kind of capital, and are not unfairly penalized. And number two, precision. Factor rates accurately reflect the risk involved, resulting in more precise loan terms. In other words, if you got all the facts about the file, and you can't just say, okay, I've been harmed as a lender by roofers over the last 6 months. They don't want to throw that other roofer into that same category, even though that's been a big deal, unless it becomes some kind of system-wide or industry-wide issue like trucking, where everybody, 50-some% are defaulting. So you got to understand why more and more lenders are trying to get out of the trucking industry. But these are factor rates; they're not interest rates. What is a factor rate, guys? Well, factor rates are a simple way to express the total cost of borrowing and revenue-based funding. They typically run anywhere from a 1.19 to a 1.55. And to illustrate that, let's say a client borrows $20,000, the factor rate's a 1.39. Their total payback is going to be 27.8, but the period they pay that back is going to be kind of flexible. It varies. It could be 4 months. It could be a year and 4 months. But it's all dependent upon the factors of the business, like the business type. Is their revenue consistent? Their FICO score, and then any other kind of unique circumstances they have. But typically, the payback periods are going to be 6 to 12 months. So I just wanted to give you that clarification. By the way, did you see that? I was sharing, right? I did click the share part, didn't I, David? Did I ever share that with them? I didn't. Well, you want me to go back over it or just?
No, I think you shared it well. I think it was good.
Yeah, I just what I did, I thought I forgot to hit share, so they didn't get to see the slides, but that's okay. They were, by the way, they were fantastic slides. So I will put them.
If you want to share them and flip through them quick, I know you usually only have 2 or 3 slides. So if you want to show them,
yeah, let me do that right quick, okay?
Do it. We may as well. There may be something on there that they're like, thank you, thank you, thank you.
All right, hold on 1 second here. Yeah, let me do that right quick. I am really sorry about this. I wish you would have stopped me here, but they didn't know I was going to be doing slides.
Yeah, I know you're sharing slides. I'm sorry, bud.
Yeah, that's okay. I'm gonna quickly just go through these.
You're still not sharing, just so you know.
No, I know it's not. Yeah. It's because I got to do this right here, and then it will share.
While you're doing that, you want me to show them something, or are you ready to roll?
I'm ready to roll.
Okay, cool. There you go.
Yeah, I'm ready to roll. I'm not going to go back. I'm not going to go back over all that, but I will just at least flip through and so that you can have them when you put them on the replay. about the benefits.
Yep.
And then, why entrepreneurs, I mean, we're going to be talking today about the cost of capital versus the effective use of
Benefits.
the capital.
Yeah.
Right. So I just, I'm going to just leave these, I'm just going to flip through each one of them just to kind of have, whenever you put them back up or video or something, especially meeting all the needs of small businesses. These are the real reasons that small businesses, fueling innovation, enhancing operations, meeting payroll, business renovation, partnership buyouts, and then basically just saying everything depends on each individual circumstance. And then I wanted to go over an insightful perspective of what the underwriters of all these different lenders are looking at, and what are factor rates, how do factor rates really become what they are, and how do you determine how long you're going to pay it back. So the main thing I'm trying to get across is these are not interest based. These are revenue based. Hold on one second. Not interest based funding like a bank.
Right.
We're actually going to have a video here real soon of the Bank Breezy program that's really pretty dynamic, that's going to be able to show people on a video so that they can actually see it, of how important that revenue-based funding can be and should and is to small businesses.
Right on. Sorry. I look at myself, I realize my hat's on angle. Yeah, and it's that empowerment, guys, that working capital empowerment. Wade, you got into this space because you, in your nutrition business, many of you know Wade is a cancer survivor. He had what they said was an incurable cancer in his face 10 years ago, Wade.
Oh man, it's been 13 years.
So they were wrong, but it introduced you to some naturopathic nutrients. You ended up starting a wellness company with beta glucan, as a naturopathic ingredient that you feel is what's helped save your life. And in that business, you were growing and you needed more capital, and you learned of revenue-based funding, right?
That's right.
That helped.
I used it multiple times.
You used it multiple times. Yeah, like a line of credit.
Yeah.
I, at the same time, was in another state and I was doing nutrition formulation. I didn't know about revenue-based capital, so I wasn't able to fuel my growth, right? And so both of us have a passion from two different angles on why this exists. You talk about the benefits of the capital. Your benefit was you were able to fuel the growth. My pain was I wasn't. No one told me about it. No one informed me of it. Fortunately, you were informed or more educated on it than I was. So you were able to benefit from that working capital. And we share this because, as YouTube title says, business funding, the benefits of this capital is Wade was able to fuel his growth and help grow his business before he ended up selling it. I had the price of not knowing about it. Some of you know business owners who are in David's camp don't know about this. Others are in Wade's camp. They know about it because you told them. Or they know about it because a telemarketer called them, but that telemarketer has one lender in mind, themselves. And they're going to try to squeeze that client to fit that one lender. And if it's a high risk to that lender, the lender's going to charge a lot more, or they're going to decline it. The funding platform, guys, the benefit of the capital is the Davids of the world who don't know anything about it and are limited, which is most businesses out there do not know. Even if they say they've heard of it, they don't really understand it. But then there's some that are the Wade out there who they do know about it, but they don't know of our funding platform. Unless you and I are an army of communicators. We are an army of leading people to this funding platform. And that's what we have to look at. There's thousands of people who've said yes to D.A.C. and we need all thousands to enable themselves. They're all enabled, but activate themselves to have daily goals. We have a new thing at D.A.C, a culture where we're going to send a victory from yesterday, a goal for today, and how can I be helped today? And we're texting each other that, and we're sending little things about, and every day I've already got 2 of my goals for today done just because I want to report done. And now I got 2 more to get done. And do you have a list of people that you need to reach out to today? Do you have a number of businesses you need to contact today? A number of businesses that you need to introduce and lead to the funding platform? They don't know about the funding platform. We are an army. You have a team, an army. We need to be militant in getting out there with discipline to take on the working capital disease. We aren't a vaccine that has a negative side effect. We come in and we're a vaccine that can obliterate working capital disease, but it's up to us to do it. So Wade, the benefits of the capital, we talked about the price, and it's really, what's the cost of not having the money? To me, I had to sell my company. I had to sell my company. What was the cost of the capital? Priceless to me. I had to sell a baby that I had birthed, that I had worked on, but I couldn't afford to keep it going because we were growing too fast. Don't think growth is good when you don't have access to capital. It's bad. You got to do this. By the same token, the price for Wade was no price at all. It allowed him to double and triple his sales because he was able to continue to fund that growth. Even though it was expensive money, it was available money, and it was a lot cheaper than not having it, like me, or not knowing about it, like me. So the benefit of the capital is what we want to focus on, not the price. If they have no benefit, it's too expensive, even if it's only 1%. If they have no benefit, it's too expensive, even if it's free, right? Because it's going to make them lazy or something. But I want to show you a bank for a minute. This is it's an example of a bank loan at 8% interest only. 8% interest only with a balloon payment at the end of 5 years of $10,000. You get 10 grand. 8% would be 800. You pay in interest year one, 8% year two, 8% year three, 8% year four, 8% year five. What have you paid over 5 years? $14,000. 14 over 5 years. Do you see that? Because you paid $4,000 in interest plus the $10,000 principal, you've paid $14,000. Now the good news is you get it for 5 years. So that'd only be $233 a month or $21.50 a day. So it's cheap money if you can get approved. If you can put up collateral. Now I know amortized loans don't work this way. I'm just giving an example that if someone says, "Hey, I only pay 8%," okay, it still costs you 40. It's like someone who has a mortgage and says, "I've got a mortgage for 4%. Yeah, it's going to cost you about 220%, 2.2 times what you borrow by the time you pay it off. So if someone gets an advance from us for 10,000 and has to pay back 14, the only difference is you got to pay it back in 6 months or a year and 4 months. So the payment's going to be a lot more. So it can be more expensive feeling than a bank because you got to pay it back quicker. So the cost of capital is higher. And you don't need to track with this except to say, even if they can get at a bank, they make them keep it 5 years so they can make their 4 grand. And if you pay it off early, you got to pay a prepayment penalty. The benefit of this capital is it's available first. This is not available to 80% of the businesses out there. They can't do this. Doesn't matter even if they wanted to, they don't qualify. So first benefit of our capital is it's available. Second benefit of our capital is it's available tomorrow. Third benefit of our capital is even when you have bad credit. Fourth benefit of our capital is it costs you nothing to find out what you can qualify for. Fifth benefit is our funding platform is going to find you the best offer so that you don't get declines from half the people. You don't even know you were declined. The client doesn't even know they were declined. Wade sends it off to several people and 3 of them decline it, 2 give an offer. He doesn't say, by the way, you were declined from 3 places. He just says, congratulations, we've got you an offer. Here's what it is. Here's what it will cost you. What are you using it for? Is the benefit outweigh the price? Then let's proceed. So when you think about all the benefits of our capital, and then you think of David, a company that Inc. magazine recognized as one of the fastest growing, I had to sell because I couldn't afford it. I had to sell because I couldn't cover the growth. I had to give up that baby and put it in someone else's hands because they had money and I didn't. So what's the benefit of this capital? Is David doesn't have to sell. David doesn't have to give up 25% of his company to grow it and give up equity forever. What's that cost? David doesn't have to borrow money from Uncle Joe and now feel Uncle Joe. Every time I see Uncle Joe at the holidays, I'm feeling bad that I actually bought my daughter a coat because I still owe Uncle Joe money. I don't want interest expense called lifestyle deprecation because my friends say you still owe me money, right? There's a benefit to this capital without all the negative side effects. So let's get out there as an army and tell stories and share our platform. And when it's not the right fit, they know. You don't have to protect people. They know if they don't have a good reason to take funding. You don't have to protect them. What you have to do is prepare them for a future, a benefit with our platform. David wasn't prepared. I knew nothing about it. Someone said, hey, I got a company that wants to buy you guys. They love what you're doing. And I'm like, sell or flatline, because I can't afford the growth. I had to take sell. So I'm a passion for this funding being available, because I know what it's like to be that owner who worked every day to get it finally successful and then have to do something with it because you can't grow it. And I know what it's like to be Wade and have that opportunity and then be able to do something. And we've seen thousands of clients who've come forward and benefited from our capital. Yeah, some of them, it's bad debt. They shouldn't have taken the money. They went and got to the casino instead, or they went and got lazy and took 3 weeks off because they no longer had to fight to cover their bills. So yeah, bad debt for some, but it's not our job to protect them. It's our job to prepare them for growing and give them the fuel to grow. And we need you and I and all of us to go to the next level. That's all I wanted to cover today. Was the benefits of this capital are far more beneficial than the profit they can make. I'd still have a company that I had to offload. That's hard to do. So Wade, anything you want to follow up on that?
Yes. I get at least once or twice a week, I get an email from an agent telling us that, listen, you say you got the best offer guarantee, but I just got an offer for this person for a stupid amount that is never going to get happen. And so all I can tell you is this. When about our guarantee, first of all, I don't believe we're going to get beat on offers. I just don't believe that's going to happen, because I get offers all the time at a crazy number, and I already know it's crazy based on all the other offers. So I have to go back into their portal and say, underwrite this. I need it fully underwritten. And then when they come back fully underwritten, it's a worse offer than anybody else's. So it's a bait and switch that's used in this industry everywhere, not with us. I mean, if we give you an offer, it's a pretty solid offer, unless you have given us some information that isn't correct, like taking money in the last couple of weeks that we didn't know about because it's not showing up on the bank verification. So when we give a guarantee offer, I'm real confident. And when someone says, okay, they got this crazy offer, they say they can get this. One told me this week, yeah, he can get $50,000. I got him an offer for like $17,000. I said, okay. And he said, well, how does he get his $500? Simple. Just tell that lender. By the way, that lender had already given me an offer. Tell that lender to go ahead and fund it. And once it's funded and everything, I'll be more than happy to cut them a check for $500 and get it sent to them. But it's not going to happen, because we really do have the best options out there on the platform. And then the final thing I'm going to tell you is this industry right now is running rampant with a reverse consolidation, debt relief kind of things out there. And if you are part of any of that, stay away. You're going to get yourself in legal battles with lenders, not us, but with lenders, because lenders are sick of it, because it's happening over and over, especially when they get funding today, and then they get this crazy call from a MCA debt relief type company, and they say, hey, I can get you, I can renegotiate all these for you. That's impossible. It doesn't happen. It's not true. And they get themselves in a jam. So I'm excited about our platform. I'm excited about our industry. I think it's going to get better and better for the brokers involved.
Amen. And when you talk about banks, and that's my last point, commercial real estate, large commercial real estate, they're called non-recourse loans, are under attack, the banks, because large buildings are defaulting. They bought the building when they had 80 or 90% occupancy, which means they could afford the mortgage payment. And these are all 5-year loans that are resetting next year and this year and the following year. And they're readjusting for the new rates. So now if I bought that high rise at 3% or 2%, it's going to be 6% or 7% next year. So now that $100 million purchase, the monthly payment's going to go through the roof, and the vacancies are up to 40% now instead of 7 or 8. Or so now they're just walking away from buildings because ABC Realty doesn't have to pay for it. They can walk away from it, and Chase Bank gets stuck holding it. So what's Chase doing? Taking massive losses. Citibank, massive losses. All of them are going, we are going to have so many losses next year and the following year. What do you think they have to do this year? Tighten their bootstraps on business funding. Tighten their bootstraps on car loans. Unless they're the one making the car, GM Financial will do all kinds of loans. Go get a car loan at Chase right now. Go get a car loan at Citibank right now. They're all going, we got to tighten down because we got to bear for a massive loss in the next 3 years because of all these commercial properties we've loaned on. They used to be good business. Now it's bad. So why is our revenue-based funding getting better and better and better and better and better? Because that 80% who can't get approved is probably going to go up to more like 90% who can't get approved at the bank. Lines of credits are being pulled. So you, as an army, as a person who's got the solution, the cure for working capital disease, it doesn't matter if you keep the cure in the bottle. You got to hand it out. You got to pass it out. So let's all find a way. Just think of a way that you can activate yourself a little more today. Can you text one more person and say, hey, did you know I'm in business funding? We've got this amazing funding platform. When the banks can't help you, we generally can. If ever you need funding, let me know. I can take care of you. I'm in business funding now. Just text that to someone. Pick up the phone and say, hey, how you been? By the way, did you know I'm in working capital? Yeah, you got a great business. Hey, man, banks are great. And if they can help you, fantastic. But we love helping business owners. Our company was started to help business owners. We've helped thousands of businesses. So if we can ever help you, let me know. I'll send you my link. I mean, just it doesn't matter if you fluff it, say it perfectly. You've got the communication out. All you got to do is send the signal, and some of the people are going to benefit today and in the future. And you've done your job. Last thing I'll say, you're not responsible for the outcome, but you are responsible for the outreach. The integrity and the way you do an outreach and the fact that you do an outreach, you're responsible for that. Don't have commission breath. Be there to serve them. You are responsible for the outreach. You're not responsible for their outcome or whether they're interested or not. That's it, Wade.
All right. I think that's it.
Nothing for you. Okay. Thank you, everybody. Oh, any questions for Wade? Any questions at all? Raise your hand, Wade. Question? Anything for me? Any questions? No. Virtual hand raise. Now's the time. Nope. Okay. Tomorrow we got healthcare at 11:30. God bless you all. Have a good one.
You have not ended the call, just to let you know.